Hey traders, Raghee here. One of the things that I've been getting asked a lot is what would it take for me to be bullish on the broader indices, meaning S&P, NASDAQ, Dow, even Russell. And, sure, I can look for some inside day or minor low breakouts, but those would still be well below the 1 month anchored VWAP and still below the rolling 10-day VWAP. And therefore, it would not change my daily time frame directional bias. So what I'll do then, rather than looking at the broader index, this is when I start to deploy a completely different strategy. And that is, it's going to pivot away from the futures indices and really, and this is something we talked about in the chat room this morning, and something I'll probably have to look at more often, which is this morning, the XLC and the XLK were basically outperforming in terms of structure the NASDAQ. Meaning that when I looked at the way in which the NASDAQ was moving, the XLC and the XLK were moving even better. XLC and XLK mean looking at Apple, means looking at Microsoft, Facebook, and Google. So of course I could even get more granular and look at those individual stocks. But if I know XLK and XLC have better structure and less exposure to all the different NASDAQ heavily weighted names and really much more concentrated on those four stocks. So for XLK, it's Apple and Microsoft. For XLC, it's Facebook and the Googles. So I know that's a little bit more concentrated, and I have a better idea of really honing in on those names that I think could carry those sectors higher. That actually worked, I think, in a way that was far cleaner than the NQ itself. So here's the NQ, which looked pretty good, don't get me wrong, but I could get much more granular, much more specific on my exposure by looking at XLC if I believe that Facebook was really leading the charge, which it actually was not, but I can definitely keep an eye on the way it was moving. Now, a lot of you might say, Rob, we don't want anything to do with Facebook because of earnings. So you could easily eliminate XLC from the conversation and focus on Apple, Microsoft, and the XLK. And what I'm trying to get at is sometimes you're going to be better off, rather than committing to the broader index, to pieces of the index, to outperforming pieces of the index. And we'll do a deeper dive on this in the premium video. Another thing you can do is pivot away completely from the index. Meaning, what are the defensives that are holding up so much better? Right in this environment, one of the few buys that I have that I've been watching is the XLU, and names like Duke, Southern, NextEra within the XLU ETF. Now this one takes us a little further away from the indices, but it's sort of the anti-indices, sector. It's another way of looking at the sector. I don't have to look at those popular heavily weighted indices if I want to go the other way with it. And typically I'm going to go look at things like XLRE, XLP, and that aforementioned XLU. So I'll pivot away and look for opportunities in places where there might be better resilience. XLP really has my attention at the 62 level, which was something we talked about in the chat room and even in our premium videos, where this could have a better shot at holding the 200 period exponential moving average, because it's not going to be quite as sensitive to the broader indices like its cousin, the XLY, would be. So we want to crack open these sectors, understand what's in them, especially in an environment where we've moved into chop. This is a choppy environment. Yes, depending upon where price action is in relation to the VWAP, I might have bullish or bearish directional bias, but make no mistake about it, this is distribution chop. This is where a lot of traders do get, chopped up. They don't call it chop for nothing. So being a sector picker, being a stock picker, finding that relative outperformance, being specific about where you think there's going to be follow through is much more important in choppy distribution fade markets than in trending markets. In trending markets, you want to play the tides. In choppy markets, you got to hone in on the boats. Hope this helps, and I'll see you in the next update.